Good evening, my dear students. Aditya Keshav, welcome. Good evening. Ibra Rajati, good evening. Shanmadi Mahalingam, good evening. Welcome. Pujan Patel, welcome. Pavitra, good evening. Good evening, Nageshwari. Welcome, Kanam. Sai, Sriram, welcome. Janani Mahalingam, Smiley, welcome, Kanam. Anantraman Sridhar, welcome. Mohan Raj, good evening. Nishita, Satish Kumar, good evening, all of you. Yes, it's winter for applicable for both inter as well as final. Input tax credits are common even for the practice purpose. You can make use now. I like to welcome faculty Bharat Kumar sir. Welcome Bharat. Arjun, welcome. Yes, it's a time for you to start our program. Very good evening to all of you, my dear students. Today's program, input tax credit with respect to GST input tax credit. Since most of the participants are here students, I request our faculty to handle November 2020 examination, what and all applicable. That is more relevant for your examination perspective, so that it may be useful for your practice articleship period also, as well as for examination preparation. So make use of the time properly. It's applicable for both the inter as well as final. Even for the practice during the articleship period also, you can make use. I would like to introduce Aravind Thangam. He is a chartered accountant, my proud student. Now he is practicing chartered accounting in Coimbatore. He is a certified faculty for GST in ICI and certified trainer for GST in Government of India and a family of chartered accountant. So he is the right person to address input tax credit. Hand over the session to Aravind. Welcome, Aravind. Thank you for accepting the offer, Kanna.
Thank you, sir. Thank you so much, sir. It is extremely a pleasure for me for having been invited to this session for the session that you have organized on a very favorite topic of mine, that too relating to GST and input tax credit. So before I begin, I should really thank sir for having been my teacher for my CA final examinations for costing at Coimbatore. Back then, Hariharan sir was coming down to Coimbatore for CA final classes, and I am very grateful for him for having helped me out with the advanced management accounting at that point in time for CA final, and having become a chartered accountant today. So it is only that has made me brought me over here, sir. I am very grateful for you. Thank you, sir.
Good.
Yes, sir. Sir, shall we begin, sir?
Yeah, please start.
Sir. So, to begin with a very famous quote in Tamil, "Katrathu kaiman alavu, kalladhathu ulagalavu." So, what I have studied, or what each of us has studied till date, is something very small, and there is a lot more to learn. It is always a learning experience, and today I take this as a very wonderful learning experience for me, and I welcome you all for this program today as a very wonderful learning experience for the next 1 hour to learn about GST and input tax credit. So, what is this input tax credit? A very common understanding, input tax credit, which is commonly referred to as ITC, is a set-off of tax paid at the time of inward supply against the tax payable at the time of outward supply. So whenever I make a sale, for rupees 100, the GST applicable on such sale is 18%. The tax that I have to pay to the government is, say, rupees 18. But I do not pay that entire amount of 18 to the government, because at the time of my purchase, I would have purchased the goods say at rupees 80 or say at rupees 90 rupees. The tax paid at the time of my purchase is called as input tax credit. So this tax that I have paid at the time of my purchase is set off, and only the remaining amount is paid to the government at the time of return filing in my GSTR 3B. So ITC is nothing but the tax paid at the time of my purchases. Purchases is not the term which is under the GST law. Under the GST law, we call that as an inward supply. So this is a very colloquial understanding, a very common understanding. But as per law, input tax is a defined term. Before we read about the definition of input tax, we need to understand the difference between the input tax credit in the erstwhile regime and the GST regime to really appreciate the concept of input tax credit. See, the GST law is a very comprehensive law which brought into the taxation for goods and services. If there is one provision which is the most beneficial provision, why the trade and industry welcomed the GST law. GST came into effect from the 1st of July 2017. If GST was welcomed by the trade and industry, it was because of this benefit of input tax credit. So what was this big benefit of input tax credit which was available in the GST law more than what was available in the erstwhile regime? See, before GST came into effect, there were concepts of central excise, service tax, VAT, which were collecting tax from the trade and industry. The concept of input tax credit was also there in the erstwhile regime, in the name of input tax credit under VAT, in the name of CENVAT credit under central excise and service tax. But what was the difference between the old regime and the GST law? In the old regime, whenever you make an interstate purchase, under VAT, you are not eligible to claim input tax credit. Say a trader was not entitled to claim credit of the service tax and the excise duty paid. The trader who was liable to pay VAT can take input tax credit of only VAT. A person who is registered central excise and service tax can take credit only of central excise and service tax and not of VAT. The vice versa was not always possible. With respect to capital goods, the input tax credit was eligible only for manufacturers. Say, for example, Joy Alucas, you take a very big jewelry shop in Chennai or for Coimbatore or any place for that matter. Joy Alucas could buy a very big safe, a very big locker for storing their jewelry. They are purely a trader. They would buy jewelry and sell jewelry. The central excise paid on the locker would be substantial. The VAT component paid on the locker would be substantial. But Joy Alucas would not be eligible to claim the central excise and the VAT credit, because central excise cannot be claimed by a trader and the VAT credit on capital goods cannot be claimed by a trader. So there are restrictions. The input tax credit could be claimed only for specified purposes. Say, for example, he could be running a spinning mill and he would buy paper for printing the invoices. And the input tax rate was not eligible because only input tax rate was eligible only on inputs. It was not eligible on the other additional items which were supporting the main process of manufacture. So only if the inputs were rated or only when it was used in the process of manufacture, it was eligible. And from the government's perspective, there was no matching mechanism at all. There was no matching mechanism whether the supplier has paid the tax for the input tax credit claimed by the recipient. So then came the GST law with effect from 1/7/2017, which had very substantial benefits than when compared to the old regime. You could claim input tax credit on all inward supply of goods or services. See, referring to the example that I was telling you, a spinning mill which was not eligible to take input tax credit for the paper purchased in the erstwhile regime, now input tax credit could be claimed even for the paper purchased. They are purchasing printer, they are purchasing laptop. Input tax credit could be claimed for all inward supply of goods or services. Under the VAT regime, interstate purchases were not eligible. Now CGST, SGST or IGST, the integrated goods and services tax, which is leviable on an interstate transaction or an interstate supply, could also be claimed as credit. Capital goods input tax credit, yes, it can be claimed 100%. No restriction. Previously, only 50% could be claimed in the first year. The balance has to be claimed before the end of 3 years. Now, entire 100% you can claim it in the first year itself. And then for the government, there is also the benefit of matching mechanism. Though not fully implemented, the original idea for the government was to introduce GSTR 1, GSTR 2 and GSTR 3. So only when the supplier enters the transaction in GSTR 1, it would be reflected in GSTR 2 and the credit could be claimed in GSTR 3. Though GSTR 2 and GSTR 3 has not been made applicable, now by way of an amendment to the GST rules, Rule 36(4) has mandated that only when the supplier pays the tax, you would be eligible to claim input tax credit. We will be able to discuss about it in the forthcoming slides. So this is just to give you an idea about why this concept of input tax credit under GST is a much more beneficial provision for the trade and industry than compared to the erstwhile regime, the old regime under central excise and service tax. So coming to the definition of input tax, 2 clause 62 of the CGST Act defines the term input tax. Input tax in relation to a registered person, means the central tax, state tax and the integrated tax or the union territory tax charged on any supply of goods or services are both made to whom and includes. And the list goes on to say the IGST charged on import of goods, and the list goes on. But the first aspect to be understood is the input tax credit is eligible only for a registered person. See, there is a very small difference between the term registered person and a taxable person. Tax can be collected by the government from a taxable person, but whereas the input tax credit is eligible only for a registered person. So why is this difference between a taxable person and a registered person? Say for example, the threshold limit for registration of a trader or a person dealing in goods is 40 lakhs. See, any person having an aggregate turnover in excess of rupees 40 lakhs has to get himself registered and should be liable for GST. There could be a situation where a person has a turnover of rupees 60 lakhs, but he has not got himself registered at all. He is not at all registered for GST. So when the department comes and finds out you have made a turnover of rupees say 60 lakhs, you should pay tax on the entire amount. Then or only for the amount rupees exceeding rupees 40 lakhs, then he would immediately say, sir, I will not pay tax for the entire amount on 20 lakhs, for the entire GST on rupees 20 lakhs. For the 20 lakhs, I have made purchases to the extent of rupees 18 lakhs. I have invoices. So you reduce 18 lakhs and you charge GST only on 2 lakhs. Because the benefit of input tax credit should be made eligible. You should give me the benefit of input tax credit. Only to debar this foul play, only to debar this tax planning, this tax avoidance, this tax evasion, the government has very carefully structured or defined the term input tax that it shall be eligible only for a registered person. So an unregistered person, when the department comes, cannot claim the benefit of input tax credit. Only and only a registered person can claim the benefit of input tax credit. So this input tax credit is eligible only for a registered person, and the definition very clearly says the CGST, SGST, IGST or UDGST paid is eligible for input tax credit. Also, the tax paid on the import of goods is also eligible for input tax credit. Then the tax paid under reverse charge mechanism. See, reverse charge mechanism was also a concept which was prevalent under VAT and service tax. Under the concept of GST, this concept of reverse charge is contained in section 9, subsection 3 and 9, subsection 4. 9, subsection 3 provides whenever goods or services are received from notified goods or services are received. Say for example, transport of goods by road by a goods transport agency, services by an advocate. These are some of the services which are enlisted in 9 subsection 3, notified under section 9 subsection 3. Whenever goods or services are received from such persons or such services are always received, then the recipient of service has to pay tax under reverse charge mechanism. So the tax paid under reverse charge is also eligible for input tax credit because of the definition in 2 clause 62. 2 clause 62, and also very similarly, a promoter is liable to pay tax under reverse charge mechanism under section 9 subsection 4. Originally, 9 subsection 4 referred to whenever goods were received from an unregistered person, but now it applies only for a promoter. So in both these situations, tax paid is eligible as input tax credit to the registered person. Input tax is defined under 2 clause 62 and 2 clause 63 defines the term input tax credit, ITC, input tax credit. Input tax credit means the credit of input tax. Easiest definition. Input tax credit means the credit of input tax. So once it satisfies the definition of input tax in 2 clause 62, then it is eligible as an input tax credit in 2 clause 63. So these are the definition portions. And the benefit of input tax credit, the entire concept of input tax credit is contained in 6 sections from section 16 to section 21 of the CGST Act and contained in 12 rules. 12 rules from rule number 36 to rule number 45. So if you read 6 sections and 12 rules, that is the entire provisions relating to input tax credit. And I would tell you that all litigations, all clarifications from the client side or all litigations from the department side are mostly with respect to input tax credit. So if you master these 6 sections and these 12 rules, I will definitely or I will confidently tell you that you can answer most of the clarifications from any client or any of the clients or any of your relatives as well. Any of your relatives, because everyone asks you, yeah, can I claim input tax credit of this? Am I eligible? I have partly exempted. I have partly taxable supplies. Can I take input tax credit? How should I claim input tax credit? So everything is contained only in 6 sections and 12 rules. Beginning with section 16. Section 16 is the section which grants the eligibility to claim input tax credit. So a registered person can take input tax credit of all inward supply of any of the inward supply of goods or services, which is contained in section 16 subsection 1. Section 16 subsection 2 immediately says, notwithstanding anything contained in subsection 6 in subsection 1 of section 16, a registered person has to satisfy conditions as contained in section 16.2. So only if the conditions are satisfied, then the input tax credit can be claimed. So what are the conditions for claim of input tax credit? Number 1. So section 16.2 enlists the conditions. Section 16.1 provides that input tax credit can be claimed for any supply of goods or services. Any supply. There is no restriction at all. Section 16.1 says any supply of goods or services is eligible for input tax credit. Section 16.2 says 4 conditions for claim of input tax credit. 1 condition with respect to a proviso and 1 more condition contained in section 16.4. So these 6 things are what are the things that we are going to read in this particular slide. Section 16.2 first condition. The recipient should have received the goods or services. So only when he receives the goods or services, you are eligible to claim input tax credit. The supplier would have raised the invoice, but only when I receive the goods, I can take input tax credit. So merely because this common question comes for invoices raised in the end of March or in the end of a particular month. The supplier has raised the invoice, say for example, on the 30th of June. I have received the invoice, I have received the goods only in the 5th of July. So when can I take input tax credit? I can take input tax credit only in the month of July and not in the month of June. Second condition, I should be in possession of a tax paying document like a tax invoice or a debit note issued by the supplier. So there has to be a document for claim of input tax credit. That document should say, this is the amount of tax paid on that supply of goods or services. Say for example, I have made a purchase for rupees 1 lakh. The tax charge is at 18%. So 1 lakh plus 18,000 rupees. That 18,000 rupees is the amount of input tax credit that you are claiming. So there has to be a tax paying document. Then the supplier should have paid the tax to the government. This is also one of the important conditions which is contained in section 16. So even if you have paid that amount of 1,18,000 to your supplier, If he has not paid the amount to the government, then you are not eligible to claim input tax credit. Then you are not eligible to claim input tax credit. We will this condition in section 16(2) has to be read along with the condition in section 36(4). There has been an amendment to Rule 36. Rule 36(4) brings about the procedural mechanism, the machinery provision brings about the procedural mechanism how this can be done. Then the input tax credit can be claimed only if the return is filed by the company. The person who is claiming input tax credit has to claim the input tax credit by filing a return. You cannot send the copy of invoices to the department stating that I have input tax credit, give me the input tax credit. No, you need to claim the input tax credit in the return, and that has to be filed in the online portal. Then there is a proviso to section 16(2) which says take input tax credit, but if you fail to make payment to the supplier for the value of the goods plus the amount of tax. In the example, so I need to make the payment of rupees 1 lakh plus 18,000. If I fail to make the payment of 1 lakh plus 18,000 to my supplier, then I will not be eligible to input tax credit. Sir, at the time of receiving my invoice, at the time of receiving the goods, how will I know whether I will make the payment within 180 days or not? It is not practically possible. We can take input tax credit once we have received the goods, once we have received the invoice. And if the payment is not made to the supplier within a period of 180 days, then the input tax credit has to be reversed with interest. What is the time limit for claim of input tax credit? This is contained in section 16, subsection 4, which says that input tax credit has to be claimed before the due date of filing return of September or the actual filing of annual return, whichever is earlier. Say, for example, for the financial year 1920, the due date for the return of September is the 20th of October. That is, you need to take the input tax credit before filing the return of September or before filing the annual return for the financial year 1920. For the financial year 1920, the annual return due date is the 31st of December 2020. 31st of December. If by any chance you file the annual return for the financial year 1920 before September, then that date will be considered. Otherwise, you need to claim the input tax credit before filing the return of September. So this is contained in section 16, subsection 4. So these are the 6 important conditions for claiming input tax credit as contained in the Act. Coming to the rules, which I was talking about repeatedly, rule number 36, sub rule 4. This is a very important rule when it comes to the practical aspects. Aravind was telling me that many of you will also be part of your articleship training, and whenever you claim input tax credit in your GSTR 3B return now, you cannot take input tax credit based on invoices. So I have an invoice. I have made payment to the party. I have also received the goods. Can I take input tax credit? No. You can take input tax credit only if it is reflected in your GSTR 2A. Only if it is reflected in your GSTR 2A. GSTR 2A is an auto-populated form which is based on GSTR 1 filed by your supplier. So whenever your supplier files his GSTR 1, details of outward supplies, then it will be reflected as an inward supply in your GSTR 2A. Only if the invoice is reflected in GSTR 2A, you can take input tax credit. That is what is provided in Rule 36(4), with a small benefit, with a small additional benefit where they say, if in your GSTR 2A, the input tax credit reflected is only rupees 50,000 rupees, you can take additional amount of 10%. See, you have invoices, you have input tax credit invoices to the extent of 90,000. But whereas what is reflected in your GSTR 2A is only rupees 50,000. You can take 50,000 plus 10% on 50,000, which is 5,000. So maximum input tax credit that you can claim is restricted to 55,000. You cannot take input tax credit to the extent of 90,000, though you have invoices to the entire extent of 90,000. You can take input tax credit only to the extent of 55,000. I will read Rule 36(4). Input tax credit can be availed by a registered person in respect of invoices or debit notes the details of which have not been the input tax credit to be available by registered person in respect of invoices or debit notes, the details of which have not been uploaded by the supplier. Under subsection 1 of section 37. That is, subsection 1 of section 37 talks about GST or one filed by the supplier. So what is not uploaded by the supplier shall not exceed 10% of the eligible credit in respect of invoices or debit notes, the details of which have been uploaded by the suppliers. So this I need not do invoice wise, I did not do supplier wise, but on a totalitarian basis, the total amount of invoices which have been uploaded by my suppliers to my credit in GST 2A is 50,000. Then I can take an additional amount of 10,000. I cannot take the entire amount of 90,000 as I told you in the example. So then, now having understood about section 16, the next concept that we need to understand, or the overall idea for discussion, is only about section 16 and about section 17. So though I told you there are 6 sections which are part of the claim of input tax credit, for the limited purpose of discussion today in this 1 hour, we will discuss only about section 16 and only about section 17. This section 17 restricts the claim of input tax credit on various accounts. Section 16 grants the eligibility to claim input tax credit completely. But section 17, 1, 2, 3, and section 17 up to section 17(6) restricts the claim of input tax credit. So first of the restriction deals with the situation where a person is engaged in both exempted supplies and taxable supplies. Say for example, there's a departmental store. Which is on a rental premises. Let's take a departmental store which is on a rental premises. This departmental store will deal with rice, dal, and will also deal with soap and shampoo. On a general understanding, rice and dal are exempted. Soap and shampoo are taxable. On a rental expenditure, I would be paying GST, and whether this GST can I attribute it entirely to my exempted supplies, which is my rice and dal, or can I attribute it entirely to my taxable supplies, which is my soap and shampoo? No, not possible, because the rental expenditure is related to both exempted and taxable supplies. So in which situation I need to go based on what is contained in section 17, 1, 2, 3, read with rule number 42 of the CGST rules. So this is what is to be explained in the next 3 or 4 slides together. So section 17 talks about the apportionment and blocked credits. So first, talking about the apportionment of credit, I have something called as total ITC. What is this total ITC? All the credits, that is all the taxes which I have paid on my inward supplies. All the taxes. I have purchased a car during the month. I have constructed a building during the month. I have paid rent partly which is used for taxable, which is partly used for exempted purposes. I have purchased cement and steel which has been partly used for maintenance of my building, which are partly used for maintenance of my residential house as well. So there could be items which are used for business, which are used for personal purposes, which are used for both taxable, which are both used for exempted. So total tax which has been paid on inward supply is what I called it as total ITC. And out of which 3 things are outrightly not eligible. 3 things are outrightly not eligible. No proportionate basis at all. This invoice is exclusively for purposes other than business. Say for example, during this particular year, I have undertaken maintenance for my residential building. It is exclusively other than business. Or I, along with my parents and my spouse and my kid, we went to a restaurant and we enjoyed some good lunch. It's been a very long time. All of us, it's been a very long time since we went out, had a very wonderful lunch or dinner. Still, we are very positive that this corona and all these lockdown times we will be able to come out of it. See, just way away from the subject, since I told about, like, say, going out for a lunch or a dinner, I'm very sure all of you miss out going for a movie all of you miss going out for a say chart, going out for a dinner or a lunch along with your family and friends. But looking at the global trend, I can very positively tell you that Corona will come and it will go by itself. You can take the example of Singapore, where not because of lockdown, but Corona has infected almost 1% of their entire population. See, the entire population of Singapore is half the population of Chennai, but the total number of positive cases is double than that of Chennai. Half of Chennai is the population of Singapore, but the number of positive cases is double. But now their trend is absolutely, they are in the negative trend. Now the number of positive cases is very, very low. So Corona will come and Corona will go. But until then, we need to be safe. So coming back to the subject, ITC exclusively other than business. Something which I have bought, I buy a pen and I use it exclusively at home. It is exclusively other than business, right? I buy a laptop for my spouse. It is exclusively other than business. If I buy laptop for my office purposes, yes, I am entitled for input tax credit. But I buy the laptop for the use of my spouse. I give it for my spouse on our anniversary. That is not at all eligible for input tax credit. Even though I pay tax and I buy that laptop, it is not at all eligible for input tax credit. That is what is called as ITC exclusively other than business. That is not at all eligible for input tax credit. Then ITC exclusively for exempted supplies. Talking about a departmental store where I deal in rice and dal. I buy rice and dal in 100 kg bags and I pack it into 1 kg bags. In a departmental store, you go there, you buy 1 kg bags of say rice. You buy 1 kg packet of dal, right? So for the packing of rice and dal, they buy various plastic pouches. These plastic pouches, there is an input tax credit on it. Since rice and dal are exempted, this input tax credit is entirely not eligible. So the packing materials which I have purchased for the packing of rice and dal is exclusively for exempted supplies and therefore I cannot claim input tax credit. Then coming to block credits. Block credits is completely a very important part of discussion today. We will keep it separately. So what is block credits is not at all to be claimed. Whatever is block credits not all to be claimed, which is contained in section 17, subsection 5. So these items you will not at all claim from your total ITC and only the balance amount has to be claimed in your GSTR 3B. So whatever input tax credit you claimed in your GSTR 3B will get reflected in your electronic credit ledger. So this balance amount should only get credited to your electronic credit ledger. Then for the purpose of apportionment, you also need to arrive at an amount which is exclusively used for taxable supplies. Say for example, for the freight, say freight incurred for the purchase of soap or shampoo. Freight, I would pay input tax credit. Freight is sometimes liable and reverse charge mechanism if it is provided by a GTA, or the GTA may as well charge 12% on the freight amount. So the freight paid for the transportation of soap and shampoo is entirely eligible. I don't have to claim proportionately at all. The freight paid for the purchase of shampoo or soap, which is a taxable commodity that is exclusively used for taxable or zero rated supplies, is entirely eligible. So when I use the term zero rated supplies, please do remember that exempted supplies and zero rated supplies are different. Exempted supplies are those which are notified to say these products are exempted. These products are exempted. That is, they are applicable at zero rate of tax. They are exempted by way of notification. But zero rated supply refers to supplies which are exports, which are supplies to an SEZ. These are only treated as zero rated supplies. So please do not confuse the definition of the term exempted supplies with zero rated supplies. Zero rated supplies are only exports and supplies to SEZ. So whatever is zero rated supplies, whatever is exclusively used for zero rated are taxable, entirely eligible. So only the balance is called as common credit. And only that common credit has to be apportioned. And not the entire credit. See, CA final students, if you have seen the May 2020 RTP question paper, the revision test paper of the Institute of Chartered Accountants of India, There's a question relating to this common credit as well. What will constitute common credit? What is exclusively for exempted? What is exclusively for taxable? And what will come as common credit? So this is something which is relevant on a very practical aspect and which is also relevant for examination purposes. So to common credit, the legal provisions provide what is ineligible. What is eligible is the balancing figure. What is ineligible has to be computed as per the rules, and what is eligible is the balancing figure. So with respect to not eligible, there could be two reasons. One, it is partly used for taxable and partly used for and exempted. Other thing, it is partly used for business and partly used for personal purposes. See, whenever it comes to this partly personal, partly business, I always recollect only one thing. See, during my articleship days, my senior, I actually undertook my articleship under my father. So my father gave this example, right? Say for example, I put up a shop for sugar candies. Panchumutai, Tamil solna Panchumutai, for sugar candies, and I buy taxable product, I buy taxable raw materials for manufacture of the sugar candy, and I make 100 sugar candies. And instead of selling 100 sugar candies, I myself consume 50 sugar candies. I sit at my shop, I eat that 50 sugar candies, then I need to reverse that input tax credit for that 50 sugar candies because it is partly used for taxable, partly used for business and partly used for personal. That 50 sugar candies which I had for myself is a personal consumption, so it is not eligible for input tax credit. But when it's used for partly personal, partly business, under GST, the provisions very clearly say only 5% of the common credit needs to be reversed. See, that is a common credit and I need to reverse only 5%, not 50-50. See, out of 100, I sold only 50 and I ate the balance 50. I need not reverse 50 because this provision very clearly says I need to reverse only 5% of common credit, right? So, very clearly the rules provide whenever it's used for partly business and partly for personal purposes, then I need to reverse only 5% of the common credit, not the entire credit, 5% of the common credit. When I use it for both when I use it for both taxable and exempted supplies, then they give a formula. Then you need to reverse the common credit based on the formula. Value of exempted supplies divided by total turnover into common credit. Value of exempted supplies divided by total turnover proportion. Say my exempted supplies turnover is 5 lakhs, total turnover is 10 lakhs. Then I need to reverse it based on that proportion. Multiplied by that common credit. So what is this value of exempted supplies? This is also, examples of common credit, say rent, telephone expenses, accounting charges, tax consultant fees, audit fees. These are some of the examples of common credit. So these common credits will always have to be considered on the proportionate basis. So how to compute this value of exempted supply? See, very easily I told you need to go based on the formula. Value of exempted supply divided by total turnover into common credit. So how to compute this value of exempted supply is provided in section 15.3 read with the explanation after rule 45. See, rule 45 is the last rule relating to input tax credit. After this rule 45, they have given by way of an explanation how to calculate this value of exempted supply. Exempted supply shall mean all supplies other than taxable and zero rated, includes reverse charge supplies, transaction in securities, say for example, it's a sole proprietary unit. The proprietor also is engaged in buying and selling of shares. Shares, you would know, generally the value would be very high. So they say instead of taking the entire value of the shares, the securities, you need to take only 1%. 1% of the value of securities need to be considered for as an exempted supply. Then sale value of land, the stamp duty value has to be considered as an exempted supply, and sale value of building, this also has to be considered as an exempted supply. For the purpose of this formula, you need to compute this exempt supplies in the following manner. Sale value of building, they will say, and then they will also exclude transactions which are enlisted in Schedule 3. Transactions which are enlisted in Schedule 3 shall also not form part of the value of exempted supply. So whatever is in Schedule 3 shall also not form part of the value of exempted supply. So what are transactions contained in Schedule 3? Transactions contained in Schedule 3, there are 8 transactions which are contained in Schedule 3. For the want of time, we are already in 540, we need to discuss a lot about section 17.5. With respect to Schedule 3, I will explain with an example. Schedule 3, one of the very important transactions on a commercial understanding, practical understanding is, see, whenever goods are shipped from a non-taxable territory to another non-taxable territory without such goods entering into India. Say, for example, there is a supplier from Dubai and you have received an order from Singapore. So goods have to be shipped directly from Dubai to Singapore. Goods will not at all come into India. From Dubai it will automatically go to Singapore. That is a transaction which is neither considered as a supply of goods nor a supply of services, because it has been inserted as a specific entry after the GST Amendment Act with effect from 1 to 2019. GST Amendment Act 2018 was brought into effect from 1 to 2019, said that this is neither a supply of goods nor a supply of services. So therefore, there are 8 transactions which are contained in Schedule 3, and these transactions will not be considered for the purposes of value of exempted supply. Very quickly to tell you, value of exempted supplies except those specified in paragraph 5 of Schedule 3. This is what I have explained to you. Extension to 17.3. Said shall not include the value of supply of activities or transactions specified in Schedule 3. So what are contained in Schedule 3? Employer to employee, any court or tribunal, any services done by MP, MLA or the members of panchayats, municipalities, funeral, burial, crematorium services or mortuary services including transportation of the deceased, sale value of land and building. Yes, it is subject to a specific condition. Sometimes it is taxable. Sale value of building is taxable in certain specified situations. Actionable claims, supply of goods from a non-taxable territory to a non-taxable territory, and supply of goods. See, these are 8 transactions which are contained in Schedule 3, which are not to be considered for arriving at the value of exempted supply. Why are we considering the value of exempted supply? Because value of exempted supply, you need to calculate the proportion. Only based on the value of exempted supply, you will calculate the proportion when you are engaged in both taxable and exempted supplies. So now we go to the next very important part of discussion for today's webinar, which will be relating to the blocked credits under GST. Under section 17, there is only one subsection called as section 17 subsection 5, which deals with this entire concept of blocked credits. So this concept of blocked credits in section 17.5, we will read it with the perspective for the examination perspective and also from a practical perspective. We will read some definitions, some understanding from the various authorities for advanced rulings for a practical understanding of the provisions of section 17.5. So section 16 says that the input tax credit can be claimed on all supply of goods or services. Section 17.5 says that for certain items you are not eligible to take input tax credit, and these are very commonly referred to as blocked credits. The first of the blocked credits that I would be discussing about would be relating to motor vehicles, vessels and aircraft. Motor vehicles, vessels and aircraft, the restriction is contained in section 17 subsection 5, class A and AA. Class A and AA deal with motor vehicles, vessels and aircraft. This entire provision, I have summarized it into a very small chart. And for easy remembering, always try to remember this chart. The motor vehicle may be owned or hired. See, whenever GST was set to come into force from 1/7/2017, July 2017, right from April, May, June, people started always asking us, sir, I am planning to buy a car. Can I take input tax credit once GST comes into force? No, car is always not at all eligible for input tax credit. So in the previous picture, the Honda City car that I showed you is never eligible for input tax credit. It's never at all eligible for input tax credit generally. But in certain situations, it becomes eligible as well. That also we will discuss when it will also become eligible. So the motor vehicles owned or hired, we need to see whether it is for transportation of goods or it is for transportation of passengers. See, there is a car. Previously, it was an Omni van. An Omni van in Coimbatore was always used for transportation of goods. That is, for textile related goods, they will always buy an Omni van and use it for transportation of goods. Or today it is Maruti Eco. They will buy an Eco and use it for transportation of goods instead of using it for transportation of passengers, because it has got that sufficient space. But it is not based on the purpose for which you use it, but it is based on the purpose which is given by law. The vehicle is registered under the Motor Vehicle Act as a vehicle for the transportation of goods or for transportation of passengers. A Maruti Omni van or a Maruti Eco is registered for the transportation of passengers. So that cannot be said to be transportation of goods. So you have a motor vehicle for the transportation of goods, then ITC is eligible. Outrightly, if you have a motor vehicle for the transportation of goods, then ITC is always eligible. So Tata Ace, you buy a Tata Ace, you buy a lorry, ITC is always eligible. No questions at all. You cannot say, sir, I will buy a TVS 50, sir, and I will use it for transportation of goods. No, that is not eligible. That is not eligible. For transportation of passengers, the aspect that has to be looked into is whether it has an approved seating capacity of more than 13 passengers, including the driver, or it has an approved seating capacity of less than 13 passengers. If the vehicle has an approved seating capacity of more than 13 passengers, why I stress upon the word more approved seating capacity? See, we know very well, right? In India, you take a van, say for example, we have to go for a trip. We, together with our friends, have to go for a trip. The number of seating capacity in that van is only 10, is only 11. We would accommodate, say, 16 people or 18 people in the van, and we would be able to adjust and go together. And say a GST officer cannot intercept to say 60 people are there in the van, or the assessee cannot go to say 16 people are there in the van. See, I have taken a photo with 16 people in the van, so I can take input tax credit. It is not based on the number of people whom you seat. It is only based on the approved seating capacity. So if the approved seating capacity is greater than 13 passengers, including the driver, then ITC is eligible. If it is less than 13 passengers, then if it is for making a taxable supply, if such vehicle, which is transportation of passengers, having an approved seating capacity of less than 13 passengers, including the driver, and it is used for making a taxable supply of, that is a further supply. Say for example, there is Maruti car showroom. The Maruti car showroom will buy car from the Maruti company and sell it to their customers, in which case they would be eligible to claim input tax credit. The Honda car, the Honda City car that I was telling you, say for example, TVS Sundaram. Sundaram Honda is the dealer for Honda cars. So Sundaram Honda will buy car from the Honda company and then will sell it to the customer. Then in which case, you will be eligible to take input tax credit. Then the Honda showroom will be, Sundaram Honda will be eligible to claim input tax credit because they are involved in further supply of such motor vehicles. If it is used for making a taxable supply of transportation of passengers, so you are making a taxable supply of transportation of passengers. You are a tour operator, or you are engaged in transportation of passengers, and you use such vehicle, then you will be eligible to take input tax credit. Then it is for imparting training or a driving. A driving school would always be eligible to take input tax credit of the vehicle purchased by them. In all other situations, ITC is not eligible. So whenever I say ITC for the vehicle is eligible, then the related services relating to that vehicle, that is services of general insurance, the service expenses, the repair or maintenance is also eligible. If the input tax credit on the vehicle is not eligible, then the related services are also not eligible. So that is what is contained in section 17(5) clause AB. Clause AB says the services of general insurance, vehicle servicing, repair and maintenance are not eligible, but it is eligible when ITC on motor vehicles are eligible. So when you are eligible for the ITC on motor vehicles, that is for a Tata Ace, you take insurance, you are eligible. For a Tata Ace, you give the vehicle for service or you give the vehicles for repair and maintenance, then you are eligible to take ITC. Not for your Honda City car that you use it at home. A manufacturer of motor vehicles, yes, he can take input tax credit of service or the insurance or the repair and maintenance. And also a person that is a general insurance company. A general insurance company can also take input tax credit of the insurance, the servicing and the repair and maintenance expenses. Next, coming to section 17.5b. 17.5b is a very big list of items, very similar to the South Indian meal or North Indian thali. You have a very big list of items on the banana leaf or on a plate in the respect of a North Indian thali, right? So there are a very big list of items in section 17.5b. Number 1 is food and beverages. Very good, as we said about the South Indian meals or the North Indian thali. Food and beverages always not eligible. Because it is always considered to be personal. Food and beverages is not consumed by the businesses, but it is consumed by the person, therefore not eligible. We will also see when it becomes eligible, but generally food and beverages not eligible. Outdoor catering not eligible. Say for example, an office, they celebrate a party, they celebrate a function. Say for example, everyone is back to office after Corona. Say for the entire team, they decide we will have a small celebration and they call an outdoor caterer and they arrange for food. Input tax credit not eligible. Beauty treatment, health services not eligible. Because these are considered to be personal. Cosmetic and plastic surgery not eligible. Leasing, renting or hiring of motor vehicles, vessels or aircraft referred to in clauses A or AA, except when used for the purposes specified therein. This was what I already told you. Whether the vehicle is purchased or whether it is used on hire, it is not eligible. That is what is said in section 17.5b that I already explained to you with respect to that chart. Life insurance and health insurance not eligible. Membership of a club, health and fitness center not eligible. You say for example, the company itself takes the membership for their all their employees in a gym, in a nearby gym. So all the employees of the company can use the facility at the gym in the evening, right? Then can the input tax credit on the fees charged by the gym can be claimed? No, because these are all considered to be, even if it is paid by the company, even if the company pays for the membership of the club, health and fitness center, input tax credit cannot be claimed because it is a block credit. Then travel benefits extended to employees on vacation, such as leave or home travel concession. So whenever it's a travel benefit given to employees, that is also for the personal purposes, that is also not eligible for input tax credit. But all the above items will be eligible where it is obligatory for the employer to provide the same to its employees under any law for the time being in force. So if the government says that you have to do this under any law, say for example, very classic example is in the state of Karnataka, Bangalore, where for a night shift employee, the company is mandated to provide rent-a-cab service. The company has to provide cab services for the employees for their night shift. So for the night shift employees, the cab services you can take input tax credit, because leasing of a motor vehicle for transportation of passengers. Say for example, Tata Indica car is taken for lease. Tata Indica car has a seating capacity, approved seating capacity less than 13 passengers, generally not eligible. But because in Bangalore it is provided that the night shift employees have to be provided with a cab facility, then it is becoming eligible for input tax credit. Very similarly, under the Factories Act, when you have the number of employees beyond a prescribed limit, it is mandatory to maintain a canteen. Canteen is mandatory when you have employees beyond a prescribed limit. In which situation, then you will be eligible to take input tax credit. So, whenever it is mandated under any law, then you are eligible to take input tax credit. So, one very practical situation that happens today is during this lockdown, during this spread of this pandemic COVID-19, the government has obligated various companies to take health insurance for their employees. See, health insurance is outrightly not eligible. But today, due to this pandemic situation, it seems, this is only for your practical understanding, this might not be relevant for your examination purposes, but in the current situation, it seems that the health insurance paid by the company is eligible for input tax credit because the government has mandated that health insurance has to be taken for the employees. So therefore, this new situation has also created one more additional opportunity to take input tax credit. So now we will go further to discuss about section 17(5)(c) and D. We were discussing about class A and AA, then we discussed about class AB, then we discuss about class B. Next we will be discussing about aspects relating to building construction, which is discussed in class C and D. So relating to this building construction, we will discuss a few of the authorities for advanced rulings. For our practical understanding, we will discuss a few of the authority for advanced ruling decisions as well. Section 17(5)(c) says works contract services when supplied for construction of an immovable property other than plant and machinery. Works contract services when supplied for construction of an immovable property. So whenever I take services for construction of an immovable property, then I am not eligible to take input tax credit. 17(5)(d) says goods or services are both received by taxable person for construction of an immovable property. See, construction of the office, I have two options. I call an engineer, tell him, see, I will pay 20 lakh rupees. You should build me an office. I will not buy materials. I will not look at labor. It is all your scope. But you will construct an office and give it to me. So the scope of using building materials and the labor. So whenever material is works contract. So works contract is done by my engineer for the construction of my office. So work contract services is not eligible for construction of a immovable property. On the other situation, there might be a very big company where they have 1,000 employees. So they will buy steel, cement, and they will say, I will construct the building using my own labor. So goods or services are both received by a taxable person for construction of an immovable property. Even I buy only cement, steel, and sand, still I will not be eligible to take input tax credit because of 17(5)(d). And so on account, including when such goods or services are used in course or furtherance of business. See, even if the building is used in the course or furtherance of business, or even if the goods are used for the course or furtherance of business, still I will not be eligible for claiming input tax credit because the specific restriction is 17(5)(d). So what is construction? We generally understand what is construction. See, we have our office. In our office, we construct a small wall in between. We have a big hall. We construct a small wall in between. Will that be called construction? Is always a question of doubt. So in which situation, for clarifying, they have very clearly given, after the explanation, after this class C, there's an explanation which is construction for the purpose of this class and D shall include reconstruction, shall include renovation, additions, alterations, repairs to the extent of capitalization to this immovable property. I repeat, to the extent of capitalization to the said immovable property. We always know what is a capital item and what is a revenue item. Whatever is taken to the balance sheet is a capital item, whatever is taken to the P&L is a revenue item. So, if I incur an expenditure and I write it off to my P&L account, then it does not amount to construction at all. It might be repairs and maintenance, but repairs and maintenance I take to the balance sheet, then it is capitalized, then I cannot take input tax credit. But repairs and maintenance I take to my P&L account, then I will be eligible to take input tax credit, because only to the extent of capitalization is immovable property, I will not be eligible to take input tax credit. But otherwise, in all other situations, I can take input tax credit. But otherwise, in all other situations, I can take input tax credit. Now look at this picture. See, there are various cubicles. It is very common. It's very common for an office to have these kind of cubicle structures. So, whether input tax credit can be claimed on these cubicle structures. See, this is a question which came up before the authority for advanced ruling in the case of WeWork India Management. See, WeWork India Management is a company which lets out shared workspaces. See, shared workspace is something, a very evolving concept, and it's a very common concept with respect to cities like, say, Bangalore. Say, for example, in Bangalore, there might be a startup company which might not be able to afford rent for a very good space. So what they would do, they would take the space, they would take a very limited space from the shared workspace. In a shared workspace, they would have all the facilities. Like, say, they would have a small cafeteria. They would have a meeting room. Then they would have an inbuilt Wi-Fi facility. So all facilities, they would have a waiting lounge when there's a new client who is coming up. So all facilities would be available in the shared workspaces. So this shared workspace unit company with this WeWork India management went to this authority for advanced ruling. See, the authority for advanced ruling is a body which is constituted under Section 9. It's a 96 of the CGST Act. This Section 96 provides that whenever you have a doubt, then you can raise a clarification to the department by way of seeking an advanced ruling. And this advanced ruling is applicable only on the applicant. That is, if this authority for advanced ruling has given a decision, then it would be applicable only on this company, WeWork India, and also to the jurisdictional officer of this company, WeWork India. So this officer and this assessee, this applicant, will only be bound by this authority for advanced ruling. But still, this decision of the authority for advanced ruling gives us an idea of how to understand the law. So for that purpose, for the practical understanding, we read the authority for advanced ruling. So in this case, the assessee went and asked, see, we are putting a flooring, wooden flooring, whether that would amount to an immovable property, whether that would amount to construction, or whether it can take input tax credit. And the other is with respect to the detachable sliding and the partitions, the various partitions that I showed you in the picture, whether it can I take input tax credit. It could be a half partition or a full partition as well. You know, there might be a full glass partition as well, whether I can take input tax credit on these. So they asked a question. See, whenever you go to the authority for advanced ruling, you need to say, this is my facts, this is my question, and then they'll give you the answer. Very much like an examination. Then, but as we all know, whenever you ask a question to the department, most of the situation it is against the assessee. Most of the situations, the ruling is against the assessee. But here, let us see what happened. They asked whether I could treat this as furniture and fixtures and not treat it as a building. The authority for advanced ruling said, the authority for advanced ruling said, the input tax credit can be availed. The input tax credit can be availed on the flooring which is movable in nature. See, generally we will say flooring cannot be removed, but it was a very special type of flooring which could be removed by nuts and bolts. They said, the applicant told the authority to say, sir, we have two types of flooring. One which is fixed. We are not going to ask input tax credit for the flooring which is fixed. But there is a flooring on top of the fixed flooring which can be detached by using nuts and bolts. This is the wooden flooring. So the authority for advanced ruling said, yes, it can be detached. So we will give input tax credit. But with respect to the detachable sliding and stacking glass partitions, the authority for advanced ruling said, no, it is not eligible. See, whenever the department says no, the assessee will go for an appeal. The assessee went on appeal to the appellate authority for advanced ruling. When they went to the appellate authority for advanced ruling, the appellate authority ruled in favor of the assessee to say, yes, it can be claimed. The input tax can be claimed even on the detachable partitions. What the assessee proved is, see, we will not always have the structure as the same size. We will not always have the same structure. We will move then and there. So for every other assessee, which I feel, we should always keep on taking photos. See, sir, for the first 6 months, the shape was like this. The next 6 months, we changed it completely like this. So it is detachable. We are changing the structure on a very regular basis. So it is not a very fixed structure. See, this is only on the lighter side, but still, this is a ruling of the appellate authority for advanced ruling in favor of the assessee. Next comes a very common question with respect to AC units, whether I can take input tax credit on the air conditioners. See, with respect to air conditioner, if I buy a Godrej AC, if I buy a Panasonic AC for my office room, it is always a plant and machinery and it is eligible. But when I buy a air conditioning unit for a large mall, then the question arises whether it is an immovable property or whether it is a movable property or whether it's a plant and machinery. So this was a question which was raised by Tarun Realtors. They were constructing or developing a shopping mall. They asked a question on my air cooling unit, on my water treatment plant, on my sewage treatment plant. They have a list of, they have a power genset, whether they have a lot of electrical wiring. Can I take input tax credit? So the authority for advanced ruling went on to say the mall would come into existence only with all these facilities. A mall would come into existence only with the AC unit, only with the electrical unit, and only after all these things come into place, it is called as a commercial mall. So therefore, all these are part of the building and cannot be separated from the building. Therefore, input tax credit is not eligible. Input tax credit is not eligible. The SSC in this case also went on appeal to the appellate authority for advanced ruling, but still it was not in favor of the SSC. It was rejected. Next comes the question of lift. Lift is also always a question. Lift goes up, goes down, whether it is movable or immovable. See, whenever we talk about lift going up and going down, I remember this movie Three Idiots, right? Where Amir Khan or in Tamil the movie Nanban Vijay explaining the definition of zip, right? Defining a machine. A zip is a machine, right? A lift moves up, moves down, whether it is movable or not, or whether it is an immovable property. This is always a question, and with respect to this question, a cooperative housing society, they went on to the authority for advanced ruling to say whether I can take input tax credit or not. The authority for advanced ruling said lift is affixed to the building, is attached to the building, it is an integral part of the building, and input tax credit is not eligible. Input tax credit is not eligible. These items, like say bricks, cement, concrete, sand, reinforcement, that is steel, glass, whether these items are eligible for input tax credit was also a question for Unity traders in Madhya Pradesh. They went to the authority for advanced ruling, said we are constructing a shed. We are not constructing a building. We are putting up a shed for storing our various items. Whether can I take input tax credit? No, input tax credit is not eligible on all these items because section 17(5) C and D outrightly provides that it is not eligible. C with respect to works contract, D with respect to goods or services. Then coming to an authority for advanced ruling in Tamil Nadu. See, this Varalakshmi Mahal is a Kalyana Mandapam which is situated in Salem. They went to the authority for advanced ruling, said, see, we have constructed an hall which is used for renting. So only if I construct, then I will be able to use it for renting. Can I take input tax credit? This all came because of a decision in Odisha High Court where Safari Retreats, when they were constructing a mall, they were eligible to take input tax credit. That Safari Retreats, the judgment is you can take input tax credit if you are using it for renting. Now the Safari Retreats courts is stayed by the Supreme Court. Safari Retreats given by the Odisha High Court, stayed by the Supreme Court. Therefore, the Tamil Nadu Authority for Advanced Ruling said we cannot take the benefit of the Safari Retreats court as well. So therefore, input tax credit is not eligible. Therefore, input tax credit is not eligible even if it is used for construction of a marriage hall. Next, coming to 17(5) G and H. See, I am skipping E and F. See, E and F talks about composition dealer. Whenever you purchase goods from a composition dealer, you are not eligible to take input tax credit. And section 17(5) talks about a non-resident taxable person. Non-resident taxable person. That is what is contained in 17(5) E and F. Coming to 17(5) G, talking about whenever goods are used for personal consumption, referring to the same thing which I told you. I am putting up a sugar candy shop. I eat 50. I sell 50. I am not eligible for. Whenever it's used for personal consumption, I am not eligible to take input tax credit. So sugar candy is only for understanding it on the lighter side. But on a very practical situation, I am a cement dealer. I buy cement and I use it for my residential construction. then I am not eligible for input tax credit. 17H talks about goods lost, stolen, destroyed, written off, or disposed by way of gift or free samples. So whenever I have lost the goods, see, input tax credit is given only because I will sell those goods. See, I have made an inward supply and I will make an outward supply, and only based on that premise, input tax credit benefit is given. But whenever goods are lost, then there will not be any outward supply for my goods that I have already procured. So therefore, whenever goods are lost, stolen, destroyed, written off, or disposed by way of gift or free samples, there are no tax implications on these transactions. So therefore, input tax credit claimed has to be reversed. Input tax claim has to be reversed. Just discussing about two practical situations. Say, in the Authority for Advanced Ruling, Gujarat, there was one person who was in the manufacture of agarbatti. This Moksha Agarbatti company, which was involved in the manufacture of agarbatti, they were involved in giving various sales promotion items. When they questioned on the eligibility for input tax credit on sales promotion items, the Authority for Advanced Ruling said, no, you are not eligible for any input tax credit on the goods which are procured for the purpose of sales promotion. All input tax credit for the purpose of sales promotion were held to be ineligible. Then, in the Authority for Advanced Ruling in Karnataka as well, this Surfa Coats was a company which was involved in manufacture of paints. This company went to Authority for Advanced Ruling in Karnataka and asked, we give various incentive schemes. For my dealers, we buy gold coin and give gold coin. We will buy a pressure cooker and give a pressure cooker for my distributors who are doing well. We will buy a washing machine. So there are various incentive schemes. I give it for my distributors, I give it for my painters to boost my sales. So it is directly related to my business. Still, the Authority for Advanced Ruling said these are not eligible for input tax credit at all. These are not eligible for input tax credit. So these are some of the practical understandings to understand the provisions of blocked credits. So I hope in this time of the last 1 hour to 1 hour 10 minutes, I made some understanding with respect to the provisions of input tax credit under section 16 and under section 17. I once again thank Hariharan sir for this opportunity and one and all for your patient listening. Thank you one and all. Thank you.
Very good, Kanna. PPT can minimize so that you can view. Yeah. Wonderful section, Aravind. Extremely super.
Thank you, sir. Thank you, sir. Thank you, sir.
One query
Thank you,
from our
sir.
students.
Yes, sir.
Reverse charge applicable when received
Yes,
from
sir.
goods received from the unregistered supplier.
Yes, sir.
That's a query from our student.
That's a question. Okay.
Yeah.
Okay. Whether reverse charge mechanism is applicable for when goods are received. Yes, sir. Section 9, subsection 4 previously provided for it, but then immediately there are lots of issues in the implementation of 9 subsection 4. Then they went on to say only rupees 5,000 you pay for unregistered persons. But today 9 subsection 4, that is whenever you receive goods from an unregistered person, now it is not applicable. Today, reverse charge mechanism is not applicable for goods received from an unregistered person.
Okay, good. Now I would like to invite faculty Bharat Kumar. Welcome, Bharat.
Thank you,
say
sir.
a few words about our
Hello, sir.
session.
Hello, sir.
Hello, sir.
Very fantastic session, sir. Thank you so much for showing up all the examples that we were. As a layman, I was able to understand 6 sections, 12 rules, section 16, section 17, and connecting all those things was like really good, sir, because I am completely new to GST. So if I'm able to understand, the students would definitely be able to. The examples that you gave, the comparisons, the old and new provisions comparison, the sugarcane candy example, I will be able to remember it for a long time because it has come from your father. He is also a big chartered accountant. I have heard about his name when I was there in Coimbatore. So succeeding by your own level of intelligence and the connection clarity, it was really good, sir. South Indian meals, North Indian meals, again, example was fantastic. So because these type of examples only will make people understand ITC in a better way. So all the presentations were like completely outstanding. So thank you so much for this session, sir.
Thank you so much, sir. Thank you, sir.
Okay, thank you, Aravind. Dear students, tomorrow 5 o'clock we are having one more session. How to make use of the technology. There is a topic for tomorrow. Assistant Commissioner of Police John Kennedy are going to address the program tomorrow. So don't miss the opportunity. How to make use of technology is tomorrow's session. Okay, tomorrow evening 5 o'clock can be once again. I'll once again say thanks to our Aravind Thangam for spending almost 1 hour plus valuable time to address our student. Thank you, Aravind.
Thank you, sir.
Thank you,
Thank you, Bharat.